there do appear to be a growing chorus of voices calling for regulators to train a closer eye on the conduct of short sellers. Earlier this week, I spoke to Columbia Law Associate Prof. Joshua Mitz, who says the conduct of some bad actors merits closer scrutiny on those engaging in the short side of the trade.
Short sellers are putting out these reports in some cases that are really lacking factual content. It's a lot of innuendo, but they're then simultaneously, sometimes down to the second or minute, engaging in sophisticated trading that triggers high frequency trading, algorithmic trading in response.
Well, for his response, Carson Block is founder and CIO of Muddy Waters Capital, one of the better-known shorts out there. Carson, I want to start with this notion. Joshua Mitz is raising two issues. One is the use of anonymous postings, eponymous, as he calls them, in terms of concealing just who it is that's making the allegations about a company. The other, I think see them as separate issues. The other is that there's trading manipulation going on. Let's deal with both of them. What's wrong with asking people to put their name, their reputation, the way you do, on the research that they're producing for the market?
Sure. I obviously, as you noted, I publish openly, but a lot of short sellers choose to remain anonymous because they're afraid of retaliation, not regulatory retaliation, because it's pretty easy for a regulator to figure out who wrote a report, because the regulator would just look for trades and get the identity from the broker. So that's not what anonymous short sellers are trying to accomplish. They've had their lives threatened. There's been at least one analyst from Alfred Little who was thrown in prison in China for 2 years for his work on a report that I think is largely found credible. And a lot of times companies like to sue them even though there's no merit to the lawsuit. They just do it because the companies have all the money, and activist short sellers often don't have nearly that much money. So that's why they choose to remain pseudonymous. And I respect that. I don't think there's anything untoward about that. I just think it's something that companies and even Joshua are kind of exploiting to cast shade on the credibility of those authors.
Joshua and others, but Joshua has done a research on this, trying to quantify and prove his point. We can debate whether he does that or not, but the suggestion he's made, and he made it on this air, is that there is a form of trading going on that manipulates the market, using put and call options ahead of the publication of anonymous reports, short reports, to manipulate the price of the stock, get in and out also anonymously.
Well, he's made a few allegations. So I think with respect to trading, first of all, when he began the interview with you, he said that manipulation by activist shorts is widespread and it's hurting innovative companies and harming their ability to create jobs. Mm-hmm. So when I heard that at the beginning of the interview, I almost fell out of my chair in disbelief. So let's break it down a little bit. When it comes to the trading, he's trying to make a point. One of the points that he's trying to make is about purchasing put options, and it has to do with what's called delta hedging. I wholly reject his point about that being manipulative. And to get into the ins and outs is probably beyond the scope of where you want to go. Mm-hmm. Credit to Joshua. He and I will be sitting down in New York in about a week and a half, and he'll be taking me through his work. And we can then have a pretty informed debate after that. But the thing that really struck me about his criticism on the trading, when he made these comments that activist shorts are often engaging in spoofing and layering, these HFT type strategies to manipulate the market. And there's a fatal flaw in his research. And that is, he has trade data showing what trades are occurring, but he has no idea whose trades those are.
Right.
So I posit that he's blaming activist short sellers for unaffiliated third-party HFTs that are drawn in because there's liquidity in the stock that an activist short seller just talked about.
Sure.
And there's some stock price movement. So basically what I think he's doing is saying, if you do something totally legal and somebody else then chooses to do something illegal to take advantage of that, he's blaming you,
Okay.
even though what you did is legal.
Fair
That's
enough.
effectively what's going on.
I mean, on the very first page, in the introduction to his research, he says he's not claiming to be able to prove who's making the trades, but he does note that some of the trading happens in advance of the publication. He suggests that there may be insider knowledge going on, either on some of the websites that publish these anonymous reports or by the shorters themselves.
Well, it's not a secret. The activist short sellers trade in front of the reports. They short the positions in front of the reports. Some use stock options, and the people who use stock options quite a bit tend to be relatively small activist short sellers who don't have a lot of capital, and so they're just taking, they want to use the leverage inherent in buying stock options. And there are, and this is totally legal in almost every jurisdiction I've looked at, there are activist short sellers who will work with a larger balance sheet because there's enough room in the trade to put more money in than the activist short seller has or is willing to risk.
Right.
So in those situations, you can see third parties come in that have presumably some sort of arrangement with the activist short seller. But that's not illegal, that's not manipulative trading, that's not a lot different from a hedge fund manager running a 2 and 20 who has outside capital and gets paid a portion of the profits.
All right, one of the questions that comes up is whether or not knowing whether a short is still holding something and for how long they will hold it feels relevant. And I'm going to put this to you in a very personal way, because the last time we had you, to my knowledge, on our air, we were talking about Manulife, and you were unveiling kind of a short thesis on Manulife. The stock declined. Are you still short Manulife? Do you still maintain that thesis?
Yes.
So you still
yes,
believe
we're
there's
still short Manulife. I mean, look, there was this regulation that was promulgated somehow 2 weeks after we published the report by the Saskatchewan executive or the Saskatchewan government, so that alters the probabilities. We're still maintaining a short, but I think maybe the interesting story there is how did that regulation get promulgated just 2 weeks after we went public with this? But if you're asking about covering, okay, the way that I analogize an activist short campaign, I say we serve, they return serve, and then we play the point. So what often happens if we're successful, you see some kind of drop day one, and not always, sometimes we see it go up, some sort of drop day one, company responds, it goes up, and then from there, it's battle back and forth. And I would say that we probably 65, 70% of the time in this massive bull market we've had over the past 10 years, our names are down over the long term. And that might be, indicative of other activist shorts. But the point is, that management is coming back with everything they have to try to discredit you. Case in point, Sinoforest. Sinoforest, and this is documented in the bankruptcy court filings, Sinoforest spent in excess of $50 million trying to discredit our research through its independent investigation that was later found to be a fraudulent sham. So when you're facing that kind of return fire, if you want to de-risk a little, I can understand it because you're probably going to get this. I mean, sometimes the company comes out with a response and it drops further, but this is sort of a usual pattern when it comes to these things. And then, like I said, for us and I think for a lot of other activist shorts, it's then down over some time scale after that.
Yeah, well, let's just make it clear. I mean, Sinoforest is one of your very famous, accurate, fraudulent short theses, not to be named in the same sentence as, I think, a thesis around a company like Manulife, which I don't think you're claiming any fraud on. But I guess one point of clarification that I would ask for is when you do a presentation like you did with Manulife, at the time, it sort of read as though, in fact, what I recall about it was that there was a suggestion the company could go under. The size of the potential damage could be so big that it could cripple this company. Even when I first read the litigation, I came to the layman's opinion that that could never happen. In other words, the regulator would never let it happen, and therefore your thesis had a weakness in it. Do you worry about drawing investors into a thesis where you do have all that information and you do know that there are weaknesses in the argument, but you'll still win if the stock goes down?
Well, here's the thing, Amanda. When we wrote that, we were quoting Manulife's own expert witness as saying the company could go under. And we wrote a lengthy report. We explained this is how the company could be caught in a downgrade cycle. We quoted from the Manulife report, and we made clear that we don't know how this is going to turn out. But the problem was, Manulife had not disclosed this seemingly material litigation to its investors. So this was not priced into the stock. And the point that we raised, and this was a pretty idiosyncratic type of thesis for us, but the points that we made were drawn directly from Manulife's own submitted expert testimony.
Right.
So I would kind of, bristle a little bit at being, at being told that I'm exaggerating something if this is what the company's expert witness is itself saying.
Although, to be clear, that expert witness was making the point that the regulator could never allow that it was too systemically an important company to go under. It was the same thought, you just used a portion of it.
No, I don't think that's what the expert was saying. The expert was saying the court, for public policy reasons, should not allow this. And this is a dispute over a contract. So the plaintiffs were saying, hey, we have this contract. According to the letter of the contract, we have to be allowed to do this.
Right.
And the expert witness says, listen, I'm not opining on the contract. I'm just telling you, court, if you allow this, then this company could go under. So the expert was not making a statement as to what the regulator would or would not do or should do. It was telling the court, you have a public policy reason. And generally in law, if you're making public policy arguments the focus of your rebuttal, you're in a much weaker position than arguing points of law or fact.
All right. Well, let me ask you, because we got to go. But obviously, you've made it clear. I mean, shorts put a lot on the line. I think those who defend the role of the short position in the market is that it's deeply thought through research often, and research that isn't being done elsewhere. Do you think that shorts get unfair scrutiny then? The reverse of where we started this conversation. Not that you need more regulatory scrutiny, but that there's an unfair bias against the shorts in the market.
From day one, I've recognized that there is a double standard applied to shorts in that we have to do everything much more carefully, much better than long side investors. But what I think is happening right now is I've been under the opinion, even before Joshua came on, that there's a consortium of companies that have been targets of activist short research that have not been able to win the credibility battles against their short activists, come together to hire law firms, to hire other proxies, to rather than attacking the actual allegations or the short seller itself, to attack activist short selling across the board. And I suspect that Joshua, who is a paid expert witness for at least for a company, if not more than one company, is a tip of a spear in this effort. So I think that what we're seeing right now, to the extent that the scrutiny is being ratcheted up, I think this is really driven by companies that want to stay in the shadows because they can't win the arguments on the merits.
Well, Carson, I know that many market participants will be interested in your conversation with Joshua Mitz, and I will be very interested. So hopefully we can talk again once you've had a chance to sit down with him.
Yeah, I'm looking forward to it. So
okay.
we'll keep you updated.
Appreciate your time today.